like, comment, and share this video if you care about your money, because what's happening with our banks affects us all. More and more banks across the United States are shutting down, and understandably, people are concerned. If your nearest bank branch closes, you might have to drive 40, 50, even 60 miles just to do simple banking tasks, and that's not practical for most folks. What's even more alarming is that the pace of these closures is accelerating rapidly. But don't panic just yet. While it's a growing issue, there are solutions, and today, we're going to break down exactly why this is happening, what it means for you, and why you may not need to worry as much as you think. First, let's talk about the numbers. In the first quarter of 2025 alone, there were 148 net bank branch closures, a huge jump from just 21 closures in the last quarter of 2024. For example, TD Bank recently announced it's shutting down 38 locations in a single month, with several in states like New Hampshire and Maine. This isn't necessarily a sign of banks going bankrupt. Rather, ET's part of a broader shift. Banks are looking to cut costs and become more efficient, especially in an economic climate where delinquencies and defaults are on the rise. In fact, some banks are going fully automated. You walk in, and there's not a single human being, just a row of a team and maybe a phone on the wall if you want to speak with someone remotely. You can even schedule an appointment using a touchscreen. So instead of running large, expensive brick-and-mortar branches, banks are opting for smaller, tech-focused hubs. Many are shutting down physical locations and instead installing clusters of ATMs or creating mini pop-up banking kiosks. But there's more to the story. The American economy is currently in a major transition phase. During the pandemic, many people were in a better financial place thanks to stimulus checks, PPP loans, and enhanced unemployment benefits. Now, that cushion is gone, household debt is rising, and we're reverting to pre-pandemic levels of financial stress. In fact, consumer debt delinquencies have surged to a 5-year high, especially since the student loan payment pause ended in October 2024. People are struggling not just with student loans, but also with credit card debt, car payments, and mortgages. Credit card delinquencies are spiking, and subprime car loan defaults have reached record levels, even worse than during the financial crisis. Right now, 6.6% of subprime borrowers are behind on their car payments, and that number keeps growing. Because of all this financial instability, banks are pulling back. There aren't as many people walking in for home loans, especially with mortgage rates hovering above 7%.
Why?
Lock in such a high rate now when you could wait for a possible drop. The demand for new loans, whether for houses, cars, or personal finance, is just not there like it used to be. Now, here's the part that might actually bring some relief. You don't necessarily need a physical bank anymore. Thanks to technology, almost everything can be done from your smartphone. Need to deposit a check? Just snap a photo and upload it in your banking app. Want to wire money? There's an app for that too. You can even schedule appointments with licensed financial advisors via Zoom or online platforms without stepping foot into a bank. Even when it comes to buying a car, you no longer have to walk into a dealership or a bank. Platforms like Carvana allow you to browse vehicles, apply for financing, and even trade in your current car online. They'll deliver your new vehicle right to your doorstep. Now, while you might not always get the best loan terms through services like that, it shows how accessible financial services have become. The only time you may still need to physically visit a bank is for services like getting a cashier check because it's as good as cash and requires in-person verification, PED. But overall, banks are reducing their need for large buildings, employees, and overhead costs. This move towards efficiency could even benefit consumers by reducing certain fees or improving digital services in the long run. See. So, to sum it all up, yes, banks are closing at a record pace, and yes, it's part of a larger economic and technological shift. But no, you don't need to panic. See, the future of banking is already here, and it's in your pocket. As always, I'll keep you updated as new information comes in. So if you found this helpful, don't forget to like the video, subscribe for more daily updates, and I'll see you in the next one.